Good morning, everyone. I'm joined today by Suzanne Isherwood, mortgage broker from Mortgage Express, based in Auckland and covering the Northwest and the North Shore. Suzanne, you are a multi-award-winning mortgage broker with Mortgage Express. So welcome, lovely to have you talking with us today.
Thanks, Tess. Morning, everyone.
So I guess there's a lot going on in the finance industry at the moment, similar with property management. There always seems to be something afoot. So I guess a little bit of information for our investors and people who do have mortgages or are potentially looking at getting one. First of all, I guess one of the burning questions that people are going to have, Suzanne, is why should you use a mortgage broker rather than going directly through your bank?
Yeah, that's a good question. So there are many benefits of using a mortgage broker instead of going directly. A couple would be to get professional and objective advice on your financial options. We'll save you time as we do the legwork for you. We give ongoing support and we specialise in just mortgages. Plus, we know what all the other banks can offer. So if your bank isn't offering the best deal, we'll go to another bank and take that offer back to your bank to get them to match it. So we'll do all that legwork and take all the stress out of it for you.
Right, so you're out there sorting all the competition out for the investors rather than them having to do it themselves.
Absolutely. And as we know what the other banks can offer, if your bank isn't that best deal, we've got the option of trying to get them to match the other banks, or we can look at taking you somewhere else.
Okay, fantastic. So there's a lot going on with interest rates at the moment and a lot of publicity in the media. What do you see happening for the next 12 to 18 months? I know it's a little bit of crystal balling and I'm putting you on the spot, but if you had a floating mortgage at the moment, what would you be doing?
Yeah, it's very interesting times at the moment. We've seen a jump in interest rates that was very quickly done. We seem to have plateaued out a little bit at the moment. So there are lots of predictions around the interest rates, and forecast does seem to be changing every week. So the most recent predictions that we're having is that the interest rates may peak next year. So if my mortgage rate was floating, I'd probably pick a 1-year fixed term right now, as I don't mind a little bit of risk. But if you're risk adverse, you might want to look at maybe a 2-year fixed rate. And there's other options that we could look to do a combination where you could split it between maybe the 1 and the 2 year. So you've got a little bit of risk and a little bit of security at the same time. But, looking at where we've been in the past, my first mortgage rate was 8.6. These are still really low rates, so they're still really great rates.
Yeah, and my first mortgage was, I think, 8.9, which my parents at the time was horrific, but they reminded me that their first mortgage was 21%. So we've obviously got to keep things in perspective as well. So I guess one of the questions is, in terms of people who are sticking with their loans or people who, as you mentioned, might be a little bit risk averse, is it a good idea to look at refinancing? And how does that work? Are there benefits to doing that?
Yeah, so there's multiple things we look at when we're refinancing. So the main question would be to somebody is, why do you want to refinance? What would be driving the move to go to another bank? Are you not happy with your bank? So if your own bank can do the same rate or a better rate, would you still want to move? So we look at lots of different things to see what's really driving that move. If you've been with your bank for less than 3 years, there's likely to be a clawback on any cash back that you may have received when you first took out your mortgage. So depending on why you wish to move, it may or may not be a good idea. So again, we can work that out for you, the savings or the cost, if you were to move. So we look at any clawback on previous cash back you've got, lawyers' cost to refinance, but we'd also look on any savings on the interest rates plus new cash back from your new lender. So for some, it may be worth doing, and for others, it may be not quite now, maybe in a year or when they get past that 3-year clawback period. So it's a good thing to look at and investigate, and there's no charges for us to look at that or in that scenario for you.
Okay, great. Yeah, that's definitely something that I think people need to be aware of is the clawback. You can't get given cash for keeping your loan with a bank and then at some point decide that you're ready to exit.
Absolutely.
Okay, so I guess in terms of, there's been a lot of legislative changes for both of our industries, which you and I talk about often over the past few years. If we do have clients or if there are people who are looking at purchasing an investment property, what do they need to know? There's plenty in the media about LVR restrictions, how you access your equity. What sort of things would you advise people of if they were looking at buying an investment property?
Okay, so firstly, we'd probably recommend that they get in touch and we can just run some initial numbers for them to find out if it's an option as a starting point. So the rules around it at the moment, if you're looking at a rental property, you have to have 40% deposit or equity or a combination in the purchase if it's an existing dwelling. So if you're looking at a new build, we only need 20% equity or cash deposit, as they're exempt under the Reserve Bank rules. So the Reserve Bank is making it more favourable to buy new builds at the moment. You can borrow up to 80% against your home. So say you're wanting to borrow against an existing dwelling as a rental and you have 20% available equity in your home, then you would only need to top up by 20% cash deposit to go into that. But if you have enough equity in your home, you may not need to put down any cash deposit. But again, we can assist them to work through the numbers and see what your available equity may be.
So really it's just about having a conversation, figuring out what your options might be, and then looking at who can provide you with the best deal.
Absolutely. And so many people are surprised at how much equity they actually do have in their property, but it's a great use to get into an investment property and make your homework for yourself.
Yeah, and look, great having an expert that can do all that for you. I know that things like insurance and mortgages can quite often be a bit of a minefield for mum and dad investors or people who are starting out. So great to have all of that free advice. One of the other areas that has been, very heavily publicised recently is the changes to the Triple CFA. If you were looking to buy, what would you advise people of? I know that bank transactions have been very heavily scrutinised. There have been some minor changes that have come into effect since it was first rolled out. What do you think people need to know about their spending habits if they're looking at potentially borrowing in the future?
Yeah, so the Triple CFA, which is the Credit Contracts and Consumers Financial Act, sets out rules that lenders must follow when they're lending you money. There's been a lot of this in the press, so a lot of our customers are quite aware of some of the smaller details that are involved. So the range of new rules have kicked in over the past 2 years, following the government review of legislation back in 2018. And the legislation is aimed at protecting consumers from bad debts and preventing them from taking on too much debt. So originally it was aimed at loan sharks, but with the legislation, it's pulled in all the banks as well. So the new rules mean borrowers are having to jump through more hoops to get credit, and lenders are having to do more digging. So the Triple CFA requires lenders to assess whether a loan is suitable for the borrower and ensure the borrower can make the repayments without suffering any financial hardship. So with that, the lenders have to make what we call reasonable inquiries into the financial information to make the assessment. So they're no longer able to rely solely on the information that you provide. So if you're applying for a loan, you're likely to be asked to provide 3 months worth of bank statements plus other financial information. Your spending habits will be scrutinised, as well as your income, your credit score, and any debts, including buy now, pay later payments. So the best advice I can offer you is you're thinking of buying a property in the next few months is to go through your bank statements, see where you can make cutbacks to tidy up those accounts. So maybe a few less coffees and a few less lunches out, as that's what's adding up into your expenditure.
And so in terms of your bank transaction history, is it okay for people to, instead of giving up things like their coffees, because I know that I couldn't, is it advisable to look at simply cutting those items out, or are the banks okay with drawing cash out at the beginning of a week and then using that to fund your minor spending habits?
Yeah, so if you're taking cash out, we then still have to allow that as an expenditure. So it still equates to the same, that you're still spending that money. So ideally, it's looking at areas where you can pull back. So a really good thing to do, a really good exercise would be to print off your last month's bank statements, go through and look at what's essential, what's a luxury, and what's a maybe I can cut back on with those luxuries. And you'd be very surprised at where your money actually goes.
I have done this exercise. It is a very serious exercise to do, but yeah, I agree that if you're looking at lending, it's actually very, very interesting, and you do learn a lot about not only your own spending habits, but potentially your partner's or...
Oh yeah, there's a lot of that we see. So it's just a really good task to go through, and then you might say, right, we're not able to buy right now, but let's give 6 weeks of pulling back our expenditure. Then we can go to a bank and say, hey, we're really serious. We've got 6 good weeks of savings habits, and we're not eating out too much, not having those extra coffees or lunches out, and then we may be able to get the approval through a little bit quicker than previously without that expenditure pullback.
And then presumably once you do get that lending approved or you do draw down your lending, the potential risk is that people do go back to those spending habits. Is that looked at by the banks, or once you've settled on your mortgage, you're free to go and spend your money as you wish?
It's pretty much, yeah. So once you've drawn down on that loan, if your expenditure then goes up again, as long as you're making those mortgage repayments, that's perfect. But you do just have to bear in mind that if you do want to come back to the bank for any future lending, then they will go through that same exercise again. So it may be that you have to pull back again before we apply to the bank again.
Well, look, hey, that's fantastic advice. in terms of it being a really good time to look at investment property purchases, we think that now is an excellent opportunity. There will potentially be a wave of investors that are looking to step back into the market, potentially come early next year. In terms of the timing, I guess the next few months is going to start to become a really active time in the property investment sector, and presumably you'll be noticing that your inquiries are going to increase as well.
Yeah, absolutely. We've already noticed that there's a number of inquiries are starting to increase. When it comes to spring, everyone feels a lot happier. The sun's out shining. So the rates are staying steady. The predictions are they may peak next year. With property prices having pulled back a little bit, I think it's still a really good time to go out now. So if the affordability is there, what would stop you?
Well, look, thank you very much for your insights and expertise this morning, Suzanne, and we will include your contact details on your website at the end of the video. So thank you for all of your advice, and we will talk to you soon.